This is Barry's Alma speaking for Claim School Incorporated with another true crime of insurance fraud story and video. This one number 63, entitled Fraud Isn't Fun Anymore. Not everyone who commits insurance fraud is a hardened criminal. Not all perpetrators of insurance fraud do so for profit. Some, like the person who is the subject of this story, do it for fun. Insurance investigators have an unearned reputation for brilliance in investigation. Movies and television paint insurance investigators as tough, highly intelligent, tenacious, and almost impossible to fool. The average, contrary to the image created by television, insurance investigator is a 25-year-old graduate of a liberal arts college with little, if any, investigative experience. The training received by insurance investigators, properly so, is directed to a determination of how much and how fast a claim should be paid. Their training in fraud detection is limited by the desire of the insurer to fulfill its obligation to pay claims fairly and promptly. The insured did not know about the lack of experience of the average insurance investigator. The insured believed a person who could succeed at fraud would be brilliant. A successful fraud would be an exciting challenge, especially since he really thought he was brilliant. He decided to attempt a fraudulent insurance claim for the excitement. The insured wanted the excitement in life he believed was his right to experience. The insured, a bookkeeper for a 4-screen movie theater, was bored with life. Every day he would count the tickets sold, reconcile the checkbook, and make sure that the cash registers recorded each sale. There was no variety to his life. Each day was like every other day. He was bored. He had ambitions for a better life, but no way to achieve it. A new life of crime started because the theater decided to sponsor an Edward G. Robinson film festival. The insured watched enthralled the movie Double Indemnity 6 times. Life insurance fraud, he concluded, was too dangerous. The insured was not as foolish as Fred McMurray. He could not take a life. He could, however, make claim for theft of items that never existed. Methodically, using his bookkeeping skills, he planned what he believed to be a perfect crime. The insurance company, he knew, would demand proof of value. He would need appraisals to obtain the high-value, all-risk coverages he would use in his plan to defraud. Getting fraudulent appraisals from others would be difficult. Bringing people into his crime was fraught with danger. To succeed with the least amount of risk required that he create his own appraisals. His first stop was the public library. He checked out books on fine arts, jewelry, and the techniques of appraisal. He also read books on insurance underwriting, so he would know what the insurer looked for in an appraisal. Then, with the assistance of a local print shop's computers, he created appraisals on the letterhead of various legitimate appraisal firms whose names he found in the telephone book. He did not want to forge their signatures, as he was sure he would be caught. The insured merely typed the name on the signature line and put the symbol, quote, /S, close quote, indicating that the original appraisal had been signed. He made copies of the documents and destroyed the originals. When he was done, he had 5 separate appraisals totaling $1,400,000 in fine arts. The appraisals reflected an eclectic collection of small 18th century porcelain, 19th century oil paintings by little-known artists Japanese netskis, 8th century Chinese snuff bottles, antique French silver, and Edwardian bronze sculptures. The insured, in his best suit, then visited an insurance broker in a high-rise office building downtown. He explained he had inherited a great deal of valuable fine arts. He informed the broker the property was stored in a secure vault at ABC Van and Storage Company. The insured told the broker he had appraisals done to see if he should sell them at auction. The insured informed the broker that he was shocked by the values and needed insurance to protect this value until he could hold a sale. He did not like the collection. It was his desire, he told the broker, that at auction he could turn the inheritance to cash. The broker, based on the excellent quality of the appraisals, had no difficulty insuring the schedule with his connections in the surplus line market. The broker placed insurance with a Swiss insurance company he knew to be 100% reinsured by a South African reinsurer. The Swiss insurer bound coverage pending a favorable inspection of the art by an appraiser of its choice. The insured emptied his life savings and paid the required 10% installment on the $42,000 premium. He knew that the inspector would arrive soon. He did not have the rest of the premium or $1,400,000 in fine arts to show the inspector. It was necessary that the ABC Van and Storage facility be the victim of a burglary before the inspector arrived. 2 days later, he visited the storage site where he had rented a room a week before. Although the room had always been empty, the insured reported to the manager that his lock was gone and his property stolen. The manager called the police, and the insured repeated the story for the police officer. The police handled the report as a routine theft with indifference. He asked no questions of the insured other than for a list of the stolen property. The insured provided the officer with a copy of the appraisals. A detective was assigned who also interviewed the insured since the loss appeared to be so big. With no leads, the detective quickly moved his investigative efforts to investigations that might bear results. The insured was disappointed. The police investigation did not challenge his preparation. It was too easy. He hoped the investigator his insurer hired would be as experienced and tenacious as the character Edward G. Robinson played in Double Indemnity. He was disappointed again. The adjuster assigned was 26 years old. She'd been investigating claims for 3 years. She was the most experienced investigator in her branch office. She sat with the insured and commiserated with his loss and gave him a proof of loss form that the insured signed on the spot. 2 weeks later, much to his shock, the insured received a draft for $1,400,000. The insured was upset. There was no challenge to the crime. There was no fun. He would force himself to enjoy the $1,400,000. He decided to find excitement elsewhere and forget attempting fraud in the future. With his new wealth, that excitement would be easy to find. Now, since his claim, his state, California, issued new Special Investigative Unit regulations instituted by the Department of Insurance that were designed to change this story. Every insurer in California is now obligated to have a fraud investigation unit. The unit must train every claims handler in the investigation and recognition of the red flags of fraud. This story, had the investigator been trained, screams with red flags like a loss shortly after coverage is bound. The insured has no documentation of his ownership of the property. He only said he inherited the art without probate. Everything insured was stolen. The policy is the insured's first policy of its kind. There was no evidence of breaking or entering the secure facility. The insured had inadequate earnings to support ownership of $1.4 million in fine arts, or even to support the $42,000 premium. The insured was totally and completely cooperative with the investigation of the insurer. The only evidence the insured submitted were photocopies of appraisals, and the insured had no original documents. If the investigator had recognized the red flags, she would have interviewed each appraiser. If the appraisers had been interviewed, the falsity of the appraisals would have been discovered immediately and the claim could have been denied for fraud. Reports would have been made to the fraud division. The insured may even have been arrested for insurance fraud in violation of California Penal Code Section 550, the Insurance Frauds Protection Act in the state of California. Instead, the insured, still bored, has a great deal more money than he could ever have earned working as a bookkeeper for the movie house. This video was adapted from my book, Insurance Fraud Costs Everyone, which is a supplement to my 2-volume treatise, Insurance Fraud Second Edition, and my book, Insurance Fraudsters Should Receive No Quarter, all of which are available as Kindle books, paperbacks, and hardcover from Amazon.com. Thank you for your attention.